Every struggling trader is searching for the same thing, an edge. Some secret indicator combination that the market hasn't figured out yet. Some pattern that prints money. Some strategy that nobody else knows about. They think once they find that edge, everything clicks. The profits start flowing. The consistency arrives. The confidence finally shows up. Here's what nobody tells you. You don't need an edge. You probably already have one and you're destroying it every single day. Because an edge without the ability to execute it consistently is just a theory. It's just numbers on a backtest. It's worthless. What you actually need is something completely different. You need repeatability, not a better strategy, not a higher win rate, not a more sophisticated approach. You need the ability to do the same thing over and over and over without your brain sabotaging you. That's it. That's the whole game. Let me show you why edge is a trap. You spend 6 months developing a strategy. You backtest it. 60% win rate. Risk-reward ratio 2 to 1. The numbers look beautiful. On paper, you're printing money. You go live with real capital and within 3 weeks you're down 12%. What happened? Did the edge disappear? Did the market suddenly change? No. You happened. Trade 1, you followed the rules perfectly. Trade 2, you got a little excited and entered early. Trade 3, you hesitated because the last one was a loser. Trade 4, you skipped entirely because you weren't sure. Trade 5, you doubled your position size to make back what you lost. By trade 10, you're not even trading your strategy anymore. You're trading your emotions with a strategy-shaped excuse. The edge was there the whole time. You just couldn't access it because you destroyed repeatability. And here's the thing about repeatability. It's not about discipline. Everyone thinks if they just had more discipline, they'd be fine. They beat themselves up. They make promises. They create accountability systems. And they still break their rules because discipline isn't the issue. The issue is that you're trying to be disciplined about something that's inherently unrepeatable. You've built a process that changes based on how you feel, based on what happened on the last trade, based on whether you're up or down for the day, based on whether you slept well, based on whether you had coffee. That's not a process. That's chaos pretending to be a strategy. Real repeatability means the process stays identical regardless of internal state. You do the exact same thing whether you're confident or scared, whether you're up big or down big, whether you feel amazing or terrible. The external execution remains constant even when the internal experience is a mess. And that's almost impossible if you haven't designed your process specifically for repeatability. Most traders design for edge. They optimize for win rate. They add confirmations to reduce losses. They layer in complexity to catch more setups. Every decision is about making the strategy theoretically better. And every single one of those decisions makes repeatability harder. Because repeatability has completely different requirements. Repeatability requires simplicity. It requires clarity. It requires elimination of judgment calls. It requires processes that are so straightforward your brain can execute them on autopilot when you're stressed. Edge asks, how can I predict price better? Repeatability asks, how can I do this exact thing 100 times in a row without variation? Those are fundamentally different questions. And the second one matters infinitely more than the first. Here's why. Let's say you have a strategy with a 55% win rate. Genuinely mediocre edge. Barely better than a coin flip. But you execute it with perfect repeatability across 500 trades. You'll be profitable. Consistently profitable. Because that tiny edge compounds when you actually let it work. Now take a strategy with a 70% win rate. Exceptional edge. The kind of edge most traders dream about. But you only execute it correctly 60% of the time. The other 40% you're breaking rules, changing position sizes, skipping trades, taking revenge trades. You'll lose money. Guaranteed. Because you're not trading the 70% edge strategy. You're trading some random hybrid of that strategy, mixed with your emotional reactions. And emotional reactions have a 100% loss rate over time. The math is brutal. A decent edge with high repeatability destroys a great edge with low repeatability. Every single time. No exceptions. So why do traders obsess over edge instead of repeatability? Because edge feels like progress. You can study it. You can backtest it. You can optimize it. You can talk about it. You can compare it. Edge gives you something to work on that feels productive. Repeatability feels boring. It's the same thing every day. There's nothing new to learn. Nothing to optimize. Nothing exciting. Just showing up and doing the thing. Again. And again. And again. Your brain hates that. Your brain wants novelty. It wants the dopamine hit of discovering something new. It wants to feel like it's getting better, smarter, more sophisticated. So you keep chasing edge while your repeatability crumbles, and your account slowly bleeds out while you're convinced you just need to find a better strategy. Let me show you what happens when you flip this. When you stop optimizing for edge and start optimizing for repeatability. First thing you notice is how much you've been lying to yourself. You thought you were following your rules, but when you actually track it, you're following them maybe half the time. Sometimes less. You thought you were consistent, but your position sizing is all over the place. You thought you had a process, but really you have 10 different processes depending on your mood. That awareness alone changes everything. Because you can't fix what you don't measure. And most traders never measure repeatability. They only measure outcomes. Did I make money? Did I lose money? That's it. But outcomes are downstream of repeatability. If you want different outcomes, you need different repeatability. And you can't improve repeatability without tracking it. So you start simple. You create a checklist. Not for setup conditions. For execution consistency. Did I wait for my entry signal? Yes or no? Did I place my stop exactly where my rules say? Yes or no? Did I risk the correct percentage? Yes or no? Did I manage the trade according to plan? Yes or no? Did I log the trade immediately after? Yes or no? 5 questions. Binary answers. No room for interpretation. No judgment calls. Just facts. You score yourself after every single trade. Not on whether you made money. On whether you repeated your process. Suddenly trading looks completely different. That winner where you entered early. That's a failed trade now. You made money but you broke repeatability. That loser where you followed every single rule perfectly. That's a successful trade. You lost money but you maintained repeatability. This feels wrong at first. Your brain screams that winning trades are good and losing trades are bad. But that's exactly the mindset that destroys accounts. Because you can't control outcomes. You can only control process. And if you judge yourself on outcomes, you'll keep changing your process to chase results. That's how you end up with 10 different trading personalities and zero consistency. When you judge yourself on repeatability, you stop caring about individual trade outcomes. You care about execution. Did I do what I said I would do? That's the only question that matters. And here's what's wild. Once you start scoring repeatability instead of outcomes, your actual outcomes improve. Not because your edge got better. Because you're finally allowing your edge to work. You're getting out of your own way. You're giving the strategy room to breathe. You're letting probabilities play out over sample size instead of interfering every 3 trades. The strategy hasn't changed. Your ability to execute it has. That's repeatability. Now here's where most traders mess this up. They start tracking repeatability and their score is like 40%. They're horrified. So they try to jump immediately to 100%. And they fail. And they feel like garbage. And they quit tracking because it just makes them feel bad about themselves. That's not how this works. If you're at 40% repeatability, you don't jump to 100. You go to 50. That's it. Just 10% improvement. Instead of following your rules on 4 out of 10 trades, you follow them on 5 out of 10. That's the goal. Nothing more. You do that for a month. You get comfortable at 50%. Then you go to 60. Then 70. You build repeatability like you build muscle. Gradually. Progressively. With patience. Trying to go from 40 to 100 overnight is like trying to deadlift 400 pounds when you've never been to the gym. You're just going to hurt yourself. But here's the beautiful thing about this approach. Every percentage point of repeatability you add makes the next percentage point easier. At 40%, you're mostly trading on emotion. Your logical brain is barely involved. At 60%, your logical brain is starting to take over. You're creating neural pathways. You're building habits. At 80% repeatability, you've fundamentally rewired how you trade. The process starts feeling natural. You're not fighting yourself anymore. You're just executing. And somewhere around 85 to 90% repeatability, something magical happens. You stop thinking about trading. You just trade. The setup appears. You evaluate it. You execute it. You manage it. You log it. You move on. Stop optimizing your entry conditions. Start optimizing your execution consistency. Stop asking what's the best indicator. Start asking, can I do this exact same thing 100 trades in a row? Because the trader who can execute a mediocre strategy with 95% repeatability will destroy the trader who has a brilliant strategy with 50% repeatability. Every single time. Without exception. You don't need an edge. You need repeatability. Build that first. Everything else is just noise.